Hello and welcome to this week's edition of Millionaire Maker. By the end of this episode, you will know how to legally pay the minimum tax on £200,000 a year. You are going to be fascinated by the different strategies that the Millionaire Makers share with you freely so that you can earn big money and pay relatively small tax. Let's go and see what they're doing. So here is today's task. Many of you already are property multimillionaires, so this is a live question that you're currently going to be dealing with. All of you, if you're not yet property multimillionaires, will be. It means you're going to get lots of income. But that also means that you need to plan how to efficiently use that income. So for the purposes of this exercise, we are going to assume today that your personal income, so if there's two of you, George and Sarah, this is each. So for each person around the table, your income from property is £200,000. What we're going to do is we're going to give you an hour to plan out, well, this is how I would structure it and this is how I would extract funds, or I would put this over here for that purpose. And I'm sure you won't, but make sure that you think about playing into that, not only income and tax and property, but also think about how you play in, put in place an investment strategy and a structure, and then tell me how you're going to distribute or use that £200,000 a year. Is everyone okay with that?
Yeah.
Good. Off you go then. You have an hour.
What we're going to do is we're going to have £4 million of commercial property. And so all these figures are for two people. So that's generating at 10%.
400.
Yeah, 400.
Yeah.
Just think of this pen. £1,000 a year, so that's income. We're in a great position that we don't need a mortgage, so all unencumbered. We paid it off a while ago. We also got some capital allowances, which is very nice when we purchased it. So capital allowances, so we've got 1.2 million in capital allowances.
Mm-hmm.
Yeah, and we didn't use them, so we've been keeping them for this very special year when we wanted to present this. So we're going to show you 1 year. So remember, everything is for two people. So we're going to spend on training, because I think it's really good to continue education. You don't know everything. There's always something you need to learn. So I'm sure Paul will be very happy. We're going to put 10% down. So we'll put in 40k. So we're going to put in 40k.
Okay.
We're going to have two cars. By the way, this is in an LLP. So we structured an LLP with two members. It's two cars, which we're leasing, and that's 12k.
They're quite nice.
Yeah, they're reasonable. Yeah. Then we've got our general OPEX.
If you want two cars like mine, you'll have to up the budget.
Yeah, that's a bit more.
Kind of
yeah.
a nice Land Rover. It's not
Yeah.
It's just
It's
So.
not a nice car on that level of income.
Yeah. Then we're going to have another 12k just for general office expenses, bit of travel, accounting,
travelling to the training,
bank fees, all that kind of thing. 12k.
mobile phone.
Yeah. And then we're going to put some money into our pension. So we're going to have 80k there.
Which is the max for two people.
Mm-hmm.
Yeah, so you're allowed 40,000 a year. So that all comes to 144k of expenses. So our taxable income is 256. Okay, 256k. However, you'll notice up here we have our pool of capital allowances, 1.2 million. So we can completely eliminate that and not pay any tax on that income. However, we do still have to pay national insurance. So we're going to pay NI, class 2 and 4. So for the two of us, it's 10, 8, 7, 8.
And where did we find that out?
Yeah, you can look up a calculator. So there's a which calculator, it will tell you. But we also calculated it manually. And it came out the same number, so whoa.
Well done. A lot of people do forget about national insurance.
Yeah, so in total, and I've completely run out of space, we'll get cash in the pocket of 2, 4, 5, 1, 2, 2. So that's how much we can keep. So if we just did that and didn't buy any more commercial property, we could last 4 years and pay 0 income tax and just pay this amount of national insurance every year. In reality, we would probably spend about 100,000 a year on another property. So in effect, we would never really get to paying income tax. We would just keep rolling it and rolling it and rolling it.
So starting from the top, you've said we want some commercial property, and because we've got commercial property, we're going to make a yield assumption of 10%. Mm-hmm. And as you well know, if it's commercial property on FRI, then you've got no let-in fees, repairs, whatever. So you've got a nice clean income, so I'm not going to challenge you on that. Your 1.2 million of capital allowances, I think, eminently doable. Depends, of course, what the specifics of the property, but 30%
is... We use kind of an average.
Yeah, I mean, that's a reasonable assumption. Mm-hmm. You've also used the tax benefit of running cars through an LLP. Yeah. Happy days. So you've said 2 cars, and it's a trivial level of detail. You've said this is the lease cost, but you would also want to, well, maybe it's in your OPEX or what you've called operational expenditure beneath it for insurance and all that stuff, because you'd want to charge all that stuff to the LLP as well, wouldn't you?
Yep.
You've then worked out the income that will be liable to tax, which is your 256, which is fine. And you've then said, well, because I've got so much capital allowances, I don't have to pay any tax, which is true, you don't. Is everybody aware, can you remember the big changes to capital allowances this year? It used to be the case that the maximum capital allowance you could claim in any one year would be £200,000.
Yeah.
But as a temporary measure for this year and next, it's been increased to £1 million a person.
So it depends on what they do in the future.
It does.
Yeah.
So your notion to sort of keep some in the piggy bank is fine. So that's nice use of capital allowances. And then what you said at the end, I think also very wise advice for anybody watching. If you keep reinvesting some of that income into more commercial property, you're obviously going to grow your income, but you're also, by the very fact that you're invested in more commercial property, you're going to get more capital allowances.
Yep.
So that's what you meant, yeah?
Yep.
Perfect. So, yeah, well, for sure. No, and your broad point that if you buy sufficient property, it's going to be a very long time, if ever, that you pay income tax is absolutely true.
Yeah.
What's their monthly spending money capability going to be? Well, it's 245 divided by 12, which is round numbers, 20 grand a month.
Yeah.
So 20 grand a month, 2.5% tax, and £80,000 getting reinvested for the future. Is that worth a round of applause? Yeah, we like that. All right, good job.
Okay, basically, I'm going to purchase one of the commercial property, which is generating £200,000. So there are a number of ways to utilize that 200,000 for beneficial of tax purposes. But I've got a couple of ways. So first way is basically if I put all my profit into limited company, how I'm going to do that. So if I've got limited company, if I set it up limited company, and which has got like a 4 partner, myself, my wife, and my 2 children, which is 16 and 14. So I can make 4 directors into company, and we have got 200,000 income. If I want to effective way taking out the money of that 200,000, which is in a company, so I would pay like for 4 directors, £12,500 each, tax free. Then I would pay all these 4 directors dividend, 2,000 each, which is for 0%, so £8,000. Then further dividend we can be able to take it out. Each director can take it out like a £33,000 at 7.5% dividend rate. But if I just take like 50,000 between 4 of us. So dividend $50,000 at rate of 7.5%. So this 7.5% is basically 3,250 pound. I'm going to pay tax, and I'm going to have to pay 18% corporation tax as well on this 50,000, which is going to be another 9,000 pound. For assuming this 200,000, I'm going to pay like a 20,000 into expense, and then tax is basically total 9,000 plus 3,250 is 12,250. Now remaining, I would invest into SAS, which is the pension scheme, where I can be able to put the money without paying the tax, 59,500. So that is going to go into the SAS scheme. Now the beauty of it is, once I transfer it, I can be able to use this to purchase any other commercial property in future, take that money out. So basically at the moment I can be able to transfer it tax free, but then I can be able to use it to do another property.
Why 59,500?
Well, this is the number the total I'm making is 200,000, the whole thing's total, including tax, what I need to pay. So I'm distributing this 200,000 effective way, and in that number this number is coming out, and then tax I'm going to pay 12,500. So basically I'm going to take out 187,750 with the tax of 12,250 pound. I would get 50,000 as a director's salary, 8,000 dividend plus 50,000. So take home money is 108,000. 12,500 will be tax. 59,500 will go into the SAS, which I can be able to use it later on. And this is how 200,000 is been distributed. The another way of doing is, if you purchase the whole thing into LLP, you get like a 800,000 capital allowance, where you don't need to pay 4 years of tax, that 200,000.
I
Thank you.
think I understand what you're saying, but let me just check. So the numbers are quite detailed there, Bhavin. He started off with £200,000, and we'll check his calculations in a minute, but Bhavin's calculations are that he's going to pay a total of 12,250 in tax. There could be, but I think for all of us it depends, well, what is it we're trying to do? So in that circumstance, Bhavin's taking out a fair amount of money for the family to live on, and his situation is going to be different to all of us. Happens to have 2 children, some of us have children, some of us don't, whatever. So, and he's putting aside a fair old chunk for the future as well. So you could certainly push that tax bill down further if you wanted to. Bhavin's obviously aware of capital allowances, as are you all. He did specifically say commercial property when he started, so the overwhelming likelihood is that there would be capital allowances, but he's not really played that card.
Because I'm purchasing this into limited company, if I would have to use the capital allowances, I will do it LLP.
Well done, correct interpretation of the exercise. So you've taken the £200,000 of income and you're choosing to pay it through a limited company, which is fine. You've included 4 directors in the limited company, and you said directors a number of times, and I'm pretty sure you meant this, but you didn't say it. So for anybody watching, I'll just make sure everybody knows. You said 4 directors in the company, and then you're talking about paying dividend. You can't pay dividend to a director, so in addition to being 4 directors, the 4 directors would need to be 4 shareholders.
Definitely,
So
together.
You've then taken the £12,500, which is tax-free, as income tax.
For each of one.
Yeah, and so that takes 50,000.
50,000, yeah.
That's £50,000, which is fine. And it's a relatively small thing, but there's a few £100 of national insurance. So as soon as you pay, I think it's more than about £7,000-8,000, there will be about £400 of national insurance per person. So you probably need to add to your tax bill, work out the national insurance correctly, but it'll be about, I don't know, £1.5 grand or something.
Okay.
The next thing that you've said is that we're going to use the tax-free dividend
Yeah.
allowance, £2,000 per person, which is perfect. The bit you missed is you can only pay dividend from profits. So although there's no tax for you as an individual, there'd be another 18% corporation tax on the 8,000.
Okay. So I've added 18% on this one.
Yeah.
So I need to add that as well.
You need to add the 18% on 58 in your example,
Sure, understand.
not 8.
Okay.
So if we add together the national insurance and the corporation tax on that dividend, it's probably about £3,000. So at the very top level, you've got 50,000 of salary, 50,000 of, or 58,000 of dividend, 20,000 of expenses. So that takes you to, if my brain's working properly, 128,000. You've then said, if I allow for the tax, the balance is what I can put into the SAS. Is that roughly the calculation you've done?
Yeah.
Okay. So I think fantastic plan. You're planning for the future. You're building up your pension pot. And I think your tax bill is going to be about 15,000, not 12,000.
Yeah, but it's a 7.5% on 100,000, which is quite good rate probably. Yeah.
Well, that's a fantastic way to look at it. So from the £200,000 of income
Yeah.
that you've divided between the family unit, they all have to be working in the business for that. But your effective rate of total tax, so corporation tax, dividend tax, national insurance, everything, perfect way to look at it, total tax rate on the 200k is 7.5%, which is a significant amount below even a basic rate taxpayer, isn't it?
That's true, yeah.
That's a fantastic way to use limited companies. So any other thoughts or comments for Babin? All right, perfect. Round of applause for Babin. Well done.
Thank you.
So I haven't really got numbers, but because I'm more into service accommodation, my whole idea was to buy mixed-use properties, shops and uppers, commercial, so that would be still commercial, but then doing developments of changing the uppers, like offices, into service accommodation at the top. So in my mind, this income came from mixed use, and then the income came after having that. So I was going to have an LLP to buy the properties, the mixed use properties, and also an LLP to do the operations of it. I didn't have any figures, I didn't write figures down because I just was thinking of the theory of it all, because I thought Paul wanted to know what would we do with the theory, how would we get to the 200,000. So that was my theory, how we got to the 200,000. And what I wanted to do was have all the profits of the 200,000 coming from the trading of the LLP into the so the trading of the LTD going into the LLP by invoicing each other. So all the income would end up being in the LLP, but after the operations of running the serviced accommodation and getting the rents from the, so let's say the rental income will be going, the mortgages will be coming from the LLP, but the trading income, the LTD will be paying rent to the LLP. So all the income will end up here, basically. So when they reclaim the capital allowances in the end, the capital allowances will take out the income from the profits of the 200,000. And what I wanted to do is invest 100, which I'm not sure technically if that's right, listening to what everything you know, technically what you were saying. But if we could put 100,000 into pensions and put it into a SAPS, where you can have more than one, you know, like up to 11,000 basically. Then I was going to borrow the money back, or 50% of it, to the LLP to buy more property, to now invest in more commercial and do exactly the same thing with mixed use properties, which will be shops at the bottom and commercial on the top, and claim more capital allowances again. So that will give me more capital allowances in the future, basically. So when I get more income, I'll still get more capital allowances. But I didn't actually put figures down.
Okay.
Did you get the theory of what I was saying?
All right.
Yes.
That is what you call high level.
Yeah, I'm sorry.
Wow, that's fine. Don't apologise.
Yeah, so basically my strategy would be mixed use, commercial at the bottom, SA at the top, converting them, getting development costs, So more capital allowances from the development cost and also from the purchase as well.
All right.
All the operations.
LLP will be proper.
Oh.
Limited company will be open.
Yes. When I borrowed the money from the SAS into the commercial, into the LLP to go and buy more property, one thing I wanted to do was to use the LLP to give guaranteed rent back to my pension, and then use the LTD to do the operations.
That's fine.
Yeah.
I mean, from my perspective, Cynthia, you didn't give us any numbers at all, which in a way you could say is a complete disaster. But conversely, I think you probably, if I was an accountant that was trying to help you, you probably gave me a clear enough brief that I could.
What I wanted to do.
Your strategy, however, is 100% critically reliant on having an accountant you could trust with your life.
Yeah.
Because they get it wrong, you won't even know they've got it wrong.
Yeah. Yeah.
And fine, so you want to buy shops and uppers, okay. And will that generate huge capital allowances? Yes.
Yeah.
But I think you do need more
To
understanding than
Understanding
that.
of the-
Otherwise, you're just going to get given a tax bill and you won't
Yeah.
have a clue whether it's right, wrong, or indifferent, will you?
yeah.
I don't know. What does everybody else think? I mean, would you if you were Cynthia, would you be comfortable going to your accountant with that level of instruction?
No.
I think it's just mega dangerous, Cynthia. And I've said this to you before. I think in your business you need a numbers person.
Yeah. Yeah.
Because to do property, you do need to understand
The
numbers.
Yeah.
Yeah, but you can see what everybody else did.
Yeah. So I was thinking, shall I do the numbers or?
That's fine. I mean,
Yeah.
I said what I said. You heard what you heard. But
Yeah.
did everybody else hear the same as what you heard? Well, they heard the same noises coming out of my mouth. They decided
Yeah.
to do something very different. Well, all right. Round of applause for Cynthia. Thank you,
Okay,
Cynthia.
thank you.
I'm also rubbish at maths, which as an ex-banker is probably the reason we had a financial crisis a few years back.
Fair enough.
So I think I've misunderstood what was required, but you said something that grabbed my attention, which is 200,000.
Okay.
And my head, with what limited maths abilities I've got, thought, brilliant, I know the answer straight away. I can go and make some phone calls and get my business earning some money today. Because with that 200,000, I've got three objectives basically. One is I need to be able to borrow money going forward. So I want a salary of 25 grand to be able to get mortgages easily. Secondly, I've lent a lot of money to my business and I want to be able to repay that. And thirdly, because of my age, I want to make sure that my pension is boosted as much as possible. So with my 200,000, I was going to use carry forward, which is the term they use for paying back the last 3 years contributions to a SAS that I've set up for my limited company. And I was going to make a SAS contribution for this year of 40,000, which takes us up to 160, and I've lent 15,000 of my own money to the business, and I wanted to repay that as well, which would take us up to 175,000 without paying any tax whatsoever. So then I wanted to take a salary of 25,000, as I've just said, which would give me a take-home pay of about 20,500, paying 4.5 tax and NI, and that's pretty much my 200,000 accounted for.
Can you say that last bit again, Nick? I got the pension contribution, director's loan repayment.
Yeah.
That took you to, did you say 175?
Yeah. No, the carry forward, the 3-year contribution to the SAS going back was 120.
Yeah.
40,000 this year for the SAS contribution.
Yeah.
And 15,000 paying back shareholder loans. And I wanted a salary of 25,000 as well.
And that is £200,000.
Yeah, exactly. On the button, which is why I was pleased and not listening to you. I was just listening to the figure.
Okay. So, is everyone clear what Nick's talking about?
Yes.
again, Nick is talking to us as opposed to writing things down, but that's fine. He's clearly got numbers. So, any thoughts?
Yeah, but you know where you've gone wrong with that.
Oh, totally, yeah.
Yeah. You can't put anywhere near that much money in your pension.
Yes.
No, you can't.
Yeah.
So if that was your operating assumption, you told your accountant after the year end, you'd have a thumping great tax bill at that point.
Exactly.
Okay, so picking up on some of the things that Nick said, I think there is always merit in having a level of income that allows you to get lending. So I think that's very wise advice from Nick up there.
Yeah.
And in the world of buy-to-let lending, there are many lenders that won't give you a loan unless you've got an income of 25,000.
Yeah.
And that is the threshold. So there is merit in paying some tax. You can, in the world of commercial finance, it's far less important, of course. And because it's not computer says no when you're making a loan application, you can explain to people, well, just because I haven't paid any tax doesn't mean I haven't earned any money, because I go through this on a fairly regular basis. I'll send them a tax return or something. I'll say, well, you haven't paid any tax, we're not going to give you any money. Well, no, I actually earned a lot of money. I just wasn't due to pay any tax on it because of capital allowances.
Yeah.
If I was reliant on buy-to-let lending, which I'm not, but if I was, I probably would elect to have a salary of £25,000 just so that I could get lending. So I think that's good advice.
Yeah.
Nick's the only one that I've heard so far talk about repaying directors' loans. Well, you actually called it a shareholder loan.
Yeah.
It would be a director loan, not a shareholder's loan. And that means that he's injected money into his business, which is personal, already tax-paid money, and he's now taking it back, which again, many, many people forget. So well done on that too, because many of us over the years have lent money to our business. Don't forget, you can take it back tax-free as and when the company makes a profit. The next thing that you said, when you start talking about carry forward, was I thought you were going to go somewhere else. Because what I thought you were going to say is you were going to carry forward prior year losses. And if you've got a company, or if you acquire a company that's got prior year losses, you can use those prior year losses to offset future profits, which I'm sure you know.
Mm-hmm.
So I thought that's where you were going, and then you went somewhere else.
Yeah.
And if you've got in your past, if you've got, again, I mean, this is really advanced content that I don't ever train, to be honest, but it's there. So I want this group, millionaires, to be aware of it. One of the many reasons you might consider buying a business instead of buying a property is the business that owns the property might have the asset that is the property undervalued because it's in a business. The other thing it might well have is a trading history of making a loss. So if you buy an undervalued asset and you buy a company that's got prior year losses, don't do what most people do and just throw it away. You can do operations in that company to make a profit, and you can write your profits against prior year losses. Okay, the public has spoken, and as always, we listen. This week, a double elimination. We are moving forward, we're going faster. So unfortunately, we lose the lovely Minimise and the equally lovely Anita. There is no right and wrong, they're both fabulous people, they're both doing really great things. So we wish them well, but my job is now to focus on the future and work with the millionaire makers that we've got left. Watch out for next week's edition. If you've liked it, please literally like it, subscribe to the channel, get your friends to do the same. You've been wonderful, I've been Paul, see you next time, bye-bye.